Hello and welcome to episode 2 of my weekly portfolio update here on The Last Investor. My name is Dan. If this is your first time watching, then you've caught me at the very start of my journey to financial freedom. My goal is to use the dividend growth investment strategy to grow my portfolio long term. I invest approximately £200 every week and update you on my experiences through the highs and the lows. I follow 4 rules in identifying a core group of stocks that I invest in. I then allocate my weekly funds to the ones that drop in value, so that basically the lower they drop, the more I allocate my weekly funds to them. Also, by investing weekly, I'm able to follow the market and hopefully I make the gains when they go up. But most importantly, those dividends will be instrumental in the growth of my portfolio long term. So to give you an overview of last week, so as we all know, this past week has seen a number of stocks fall in value, and my portfolio unfortunately is no exception. The biggest drop in value for me, as you can see here, is Rio Tinto. Rio Tinto is effectively falling about 7.4%. So I used that opportunity. In fact, I saw that as a benefit, as a plus. And I seized on the opportunity to buy 3 more shares in Rio Tinto, as can be seen here, and I purchased that at 45.43, and as you can see, it's dropped even further because it's now at the moment trading at 43.8. So maybe I should have waited a little bit longer, but so such is the market. One thing to also say about Rio Tinto is that they also announced midweek their half-year earnings result, as well as their ex-dividend date. I've done a separate video talking about that and giving my view on the stock as a whole, so you can check that video out, and the link will be in the description. In terms of the most resilient stock of the week, that has to go to Bellway Homes. As you can see, it's the only stock I've got that's in the green. Basically, it's still maintained 1.28% profit, which is good. And basically, that's been very good. I was quite surprised. I wasn't expecting it to do that well in a downturn in the market, but of course it's still early days. As you can see, the other stocks that I've got, they've all taken a drop in value as well, at varying degrees. Actually, I take it back. BHP appears to have been the one that's dropped the most, losing 8.78%, which in fact is a big drop. Okay, to talk about BHP, I've actually been evaluating my portfolio recently, and whilst I really like the stocks that I've selected so far, there are 2 stocks that I am considering making a change on, and that's BHP, Billiton and 3i. Just to talk about BHP very quickly. Whilst BHP continues to fulfill all 4 of my fundamentals, and I really can't fault it in that regard, I remain quite doubtful about the company's future ambitions. My main issue really is with the oil and gas portion of their business. I'm not so keen on that industry as a whole, and frankly I don't see a great deal of future in oil and gas at all. It's not in alignment with my personal principles, and obviously everyone's entitled to their own principles, and you've got to invest in what you truly believe in. Otherwise, when things really go down, it's very hard to stick with it, and it's not in alignment with my personal principles, and I feel that more strongly now that it's best to follow stocks that are in line with your principle. So I will be removing it from my portfolio once it goes into the green. But for now, I won't be doing anything else to it. I won't be adding any more funds to BHP, and I'm just going to keep it as it is and sell it in due course. In terms of 3i has in fact been the most resilient of my stock behind Bellway Homes, and I'm going to monitor that and see how that goes. If it continues to show resilience, because obviously it's they're an investment company, and obviously they invest in diverse businesses, and that might be the reason why it's doing well in terms of resilience. Well, relatively in terms of my portfolio. And there are of course many other stocks out there which are doing very, very well in the current environment. But as far as my portfolio is concerned, this seems to be one of the most resilient ones in there. Now, talking about defensive stocks, there are, of course, more signs that we are entering into a recession sooner rather than later. And so it's important to review our portfolio to see if there are any defensive stocks out there that we could add to the portfolio to balance it out and ensure that we're not impacted severely during a bear market. So that's what I've been considering. So far, as I said, Bellway has been my most resilient stock. But I generally don't necessarily consider it as a defensive stock. And of course, the second most resilient, as I said, is 3i, and I'm going to continue to monitor that. I'm also currently considering Centamin. Centamin is basically a gold mine company. If you haven't heard of it, it's a stock which basically it was a company that basically mines gold, and generally speaking, its value or the way the business, the share price tends to follow the price of the actual gold itself. So whenever stocks are doing very badly, then people tend to take their assets and invest in gold, and sentiment for some reason seems to benefit from that relational behavior. So I've looked into Sentiment, and as far as I'm concerned, it certainly meets the 4 rule criteria that I've set. It's literally got zero debt, and I mean literally zero debt. It's got a very strong balance sheet. It's cash rich, and basically it's also growing its business. It's expanding into other mining areas, into West Africa in terms of future mining potential. So I really see a future for Sentiment. It's got a very strong base within its industry, in the gold mining industry. So I see a good future in that. I don't think that this stock is going anywhere soon. So I will be investing in Sentiment in the future. It also pays a dividend biannually, which with a yield of about 4.39%. So again, a decent yield for that type of stock. And as I said, gold is always going to be in demand. More importantly, when cash loses value, people turn to gold. So it's going to be the defensive stock that I'll be looking to for the future. But I'm not going to be adding that to my portfolio this week. In terms of my fund allocation for the coming week, I intend to buy more shares in Rio Tinto, maybe 3 more shares or 2, and I'll also be buying shares in the Renewable Infrastructure Group because both of their ex-dividend dates are in August, so I want to maximize that dividend payout as much as I can. Then in other news, I have an app that I use to track dividends. It tells you when all the dividend dates are due to arrive, and so you can use this app if you wanted to monitor ex-dividend dates, when the dividend payments are meant to reach your account, or when to be paid out by the company, so you can keep an eye on that. I've started using this app. I think it's really, really useful, and it just makes life very easy. You can actually put in your stock allocations and how much you have, and it gives you exactly how much dividend you're meant to be paid out. I'll quickly just show you the app. It's basically called Dividend Max, and you can just go to dividendmax.com and you can access it from there, add it to your home screen, and once it's there you can add your shares into it. You see, I've created a portfolio for myself. I've added all my shares, and it even confirms the current value of my portfolio so far, which is £853. And you click on the next button along, then it lists all of your shares there, as you can see. And when you click on each one, so if we click here, for example, on Rio Tinto, it tells you your ex-dividend date for Rio Tinto, which, as you can see, is this Thursday, the 8th of August. So that means that if you wish to buy any more shares in Rio Tinto, you need to do so by Wednesday, the 7th of August, if you want to qualify for that dividend payment. And what I really like about this app is if I go into the next tab along, it literally lists out all of the expected dividend payments for each month. So as you can see, for September, as far as my portfolio is concerned, I'm due a special dividend on the 19th and ordinary dividend payment on the 19th from Rio Tinto, $3.99 and $9.87, which is quite good. I'm quite impressed with that. BHP will be paying me £1.09 on the 24th of September, and the Renewable Infrastructure Group will be paying me £4.05 on the 30th of September. So in total, despite my very young and very small portfolio, I'll be earning £18.99. I'll be a proud dividend owner of £18.99 in September. So that really, if anything isn't, then this really is a huge motivation for me to carry this journey on. I feel really inspired by this. Of course, you could see it then does a projection out. This is not guaranteed, but what the app projects would be further future dividend payments for, I think it goes all the way to about 2022, which is quite decent, that it sort of like projects out. And apparently they also say that their projections tend to be relatively accurate. Well, not accurate, but close to being accurate. So that's quite a good thing to have in terms of estimates of future dividend payments. So again, that's something that I think is quite handy to have in hand. Obviously, you can click on these additional tiles, and again, that gives you the dividend payment. It tells you what type of dividend payment it is. So as you can see, that's a special dividend payment there, and the next one there is just an normal interim payment there as well. So that's it. I hope you have enjoyed this video, and if you're new to this channel, then please do subscribe and like this video to help me grow this channel. I would really love to get to about 100 subscribers, so that I can get this message out to everyone. Anyway, thank you very much for watching this video. Peace.